Hey everybody, it's JJ from tradingsyndicate.org. Hope you're having a wonderful weekend. A bit of a weekend update and try to take a quick look ahead and see what the charts are telling us. Focusing on ES right now. As we go into the Fed, we have a couple of events. We have a Fed meeting next week. We also have contract rollover coming up. So when you have a contract rollover, I have noticed, I don't have the stats, but I have noticed that these markets tend to experience quite a bit of short covering, especially if there are things like unfilled gaps. Um, how do you know that shorts are stuck? Well, having made markets for decades, you see the lows moving higher. That's really simple. That's the buyers chasing price higher because, for example, at 68.50, we had sellers there, right, for days. When those sellers saw that there was some new meat, fresh buying, they raised their offers, right? And now that area has become support. So that's one of the levels that you're going to look at. We kind of did a look above and fail of 68.87 on this purple chart on Friday. Watch Friday's low and down here at 68.50 to see if the market bids, if we retrace and come back down. There's some levels to look at. If 68.50 breaks, you'd be looking at the 68.20 area on the downside for larger size accounts that are holding trades for longer time frames. If we get above 69.11 and a quarter, then there's really only 2 days of inventory above. So there's really very little overhang. That's why the sellers stepped in because they were there before. This time they front ran that level. If you're a swing trader and you want to know where you're going to encounter resistance, here's a simple little trick that nobody will tell you, right? The top of every candle or day, that's where the sellers initiated and pushed price lower. So if you go and look at the top of these two candles back in October, that's where that sell originated twice at 69.11. Dip back up, couldn't get underneath, big liquidation. So they sold there again. They were waiting there. And why wouldn't you be? If you were a seller there, why wouldn't you sell again if you had size? You have size here, you'd be selling here. They front ran that level. The high was 69.05, so we didn't even get close to 11 and then push down with a 68.79 close. Look for a little liquidation. That would be healthy. It would be nice, right? We've been trend up for a few days now. So what I was afraid of happened. We went sideways and then this happened instead of this. So let's see if we don't get any liquidation, right? If we open inside Friday's range and cost basis, then just trade it as an inside day back and forth. We'll go show you some levels on the good old 4 hour chart. And where is that? It's right here, right there. There's that 68.76 level. There's a bunch of volume underneath this. These distributions have brought buyers going into the end of the year. And any dips are bought, which means when you put the product on sale, they come running in, right? This is like you're putting in those new fangled gadgets that you kids are playing with. They put them on sale, you guys come running into the store. Till that stops happening, we're still in the front end of the move, right? And you can see that they've distributed a lot of product here and demand keeps coming in as the price goes up because people are trying to cover their short. They're trying to position themselves before the Fed. Late traders are trying to get stuff done before the end of the year. So there's a lot of cross traffic. Be careful in your trades. Always make sure your risk is tight. You're looking for 76, and then the bottom of those two 4 hour candles down there. That's where you'd be looking for, 68, 66 down to 68.50. Yeah, that's where you're kind of looking for. Let's go take a look. This is another one of these longer term charts, and we there's that 68.60 again, 64 this time. Watch your previous day low. If we come back underneath that, then it'll be a look above and fail of that level. and you'd want to be shorting down here. Let the sellers show themselves before, don't get caught. If it opens, and then takes out 84 and starts getting up to 90, 95, be careful. Just be careful. If it gets above cost basis here, be careful if you're a short seller. Just watch your whiskers. Let's go take a look at the TPO chart. So the upper stops. So here's our close at 79 half. The upper stops are basically up here. There's, excuse me, let me just draw out these upper stops. And what I mean by upper stops are the top of these half hour candles are where a lot of traders will have their stop, right? If you're trading a half hour bar, you'd have your stop at the top of the closest bar, right? So if we take out the 82s and take out those stops, it's going to trigger buying. And then 68 and 91 and then 92 and a half, three quarters are going to be your upper targets. If we take out 68.76, you're looking for yesterday's low. Now, sorry, Friday's low. Friday's low was a poor low. Okay. So that's going to be a very interesting area when we come back down. You're going to see that if I took a line and I drew a line from that poor low to the point of control of the previous RTH session, you'll see that Friday's low could not get down to that cost basis and the close. Pretty interesting. That means that's where the most recent set of shorts are trapped. I'm going to do a video about time frames. I just trying to do it where it's clear instead of confusing everybody. So that's why that's a little delayed. But that low down here, if we break that, then definitely look for down to that 68.54 level. That's the old overnight low from Thursday of last week. Okay. Thursday's overnight low. But some areas for you to look at. Remember, let the market open, find yourself a nice balance zone, and sit and watch, relax. Sunday night, pour yourself a glass of wine, take it easy. Right, here's our half an hour chart. You could clearly see that we've got, I think we'll get some distribution, maybe between 70 and 94, 95, just in this area. I think we might just go sideways, right? So what you could do is just trade the outside in, if that was your balance. You can do that. I like to use a 1 minute chart to map out my zones. You can use a 1 minute, you can use a 5 minute, whatever you want, whatever floats you. For newer traders, you should be using a small time frame chart so you get used to thinking and moving fast. The last thing you want to be is a slow trader. Even if you're swing trading, if you're a slow decision maker, you should be more investing than trading. You got to be quick sometimes in these markets. So you can see that we had this dip here in M period, right? At the end of the day, M period opened up here, dipped, and then boom. So we got a lot of people trapped short 88, okay? Because when it dipped down here and then popped back up at the end of the day, anyone who followed it, 76, watch that level in the overnight, right? I might be awake. I might be awake, and I'll post some notes if I am. Um, it's about 11 o'clock for me. So let's see if that opens. And of course, if it's slow, everybody can go to sleep and then wake up again. But just do your balance levels, right? There's a balance here. It's a small one. Let's see what it opens up like. I'm just going to leave this on the chart for now. And you guys, the levels work great. I mean, that look below and fail of 69 was beautiful. It's happened twice now. So the bid is there. It was here the first time and it's there the second time. That's how you should be looking at charts, is to find the bid and to find out where the sellers are. Okay, the sellers are right here, right? That's clear, right? You'd have to be blind. You'd have to, be hard of sight to see that. You can see that the sellers are right there under 82. right? There's like a wall. And then when you look below 69, you pop right back up because that's where they stop selling, right? So they sell all the way down, right? They sell all the way down, but they hit the sell hard. Here's where they stop selling. The sell orders go down, the market pops back up. Remember, big candles, big orders, small candles, slow business. Okay. That's why we want to trade these candles instead of being stuck in this kind of chop. Means you got to wait and be patient. People hate doing that. Hey, but that's why you guys make the big bucks. All right. Have a great week. Visit us at tradingsyndicate.org and you have to check out our AI trading coach. It is for the amount of money that you're going to spend with the room and the coach. I think Steve's running special this weekend. Please check us out on XMV Web Trader One, and I repost the stuff. Um, but if you want to stop chasing signals and build your edge through intelligent feedback from trusted sources, and develop some discipline and actually run this as a business, you can't go wrong. And that's AITradingCoach.org. I'm JJ. I'm VWAP Trader One on X, and this is TradingSyndicate.org. I hope you're having a wonderful weekend. Thank you so much for watching, and we'll see you bright and early at 7:30 in the morning UK time, 2:30 in the morning New York time for all you insomniacs and those of you who are working the night shift. That was a good song by the Commodores. Anyway, have a great weekend. See you in the morning, folks. Bye for now.